90% of the people in the stock market, professionals and amateurs alike, simply haven't done enough homework. Doing studies is the homework that we need to do to make sure that we're always staying on top of changes in the market. Study past winners and you'll buy future ones. And doing a study is all about studying the past and seeing if there's new edges that you can adopt or tweaks to your existing system that can improve your performance. So first, what is a trading study? Basically, it's an organized effort to explore an element of the markets, and the goal is, developing a new edge, a new setup, a new entry tactic, something that can help you basically perform better. What you want to go through is, get an observation, have an idea for a study, create a hypothesis based on that idea, collect examples, analyze them, draw conclusions, and then if need be, test and iterate. All right, so finding inspiration. First step, obviously, is to become committed to improving, actually want to improve at trading and be willing to put in the work to get there. Then you want to be curious about the markets, how can you improve? And then also, studying established practices and what people do now, but not being afraid to question them and question common wisdom. Be willing to try new things and balance between your existing process and tweaks. All right, so once you've defined the scope, then you want to actually go ahead and collect examples and the data itself. And there's a few different ways that you can do this, kind of three main ones. First is, doing it manually, studying top performing stocks, building a database going back 10 plus years of great IPOs, great performing stocks. Another way to do that is work with a team. If you've got a trading buddy or, a few trading friends, you can crowdsource the work together to build that database. Maybe somebody's in charge of IPOs, somebody's in charge of new stage 2 uptrends. You split up the work that way, and then it all comes together, and each of you would kind of be an expert on your part of the study. And then you can combine that knowledge into your actual conclusions. The last way is doing it automated. So use Python or another programming language to collect examples of your observation pattern. You could also use a platform for screening like DeepView to look in the past for different characteristics. And this is another really good way to collect a lot of examples, but you're not going to be able to quite go as deep into each of them as you would if you're doing it manually or crowdsourcing. Manual, in a way, is where you're going to get the most benefit out of doing this. But just like with building model books and doing post-analysis, I think there's so much potential in leveraging AI to dive deeper into this process and, help us brainstorm, help us think through and analyze the results and all of that. So this is actually the last of the educational webinars. So bittersweet to be doing this, but this has been an awesome series. Let me know in the chat if you've attended, the majority of these. I know there's a lot of familiar faces in here. I think a lot of you have at least watched all of these, but this has been a lot of fun, and I think we've shared a lot of great information, knowledge, experience, and complemented the book in an excellent way. So yeah, this has been a lot of fun. Hopefully you guys have gotten a lot of value out of it. I think especially if you're newer at trading, this provides an excellent foundation, and the book as well does that exact same thing. So again, each of the webinars that we've done over here coincides with one key chapter, one key concept from the Trader's Handbook itself. So if you really enjoyed the webinars, you'll absolutely love the book. It dives deeper, approaches things in a slightly different way. And, we kind of want to communicate the material both in a webinar format as well as in a written resource, because some people prefer learning through webinars, some people prefer reading books. So we want to, present things in each of those ways. So yeah, again, if you've enjoyed the webinars, definitely pick up your copy of your book. It'll be a great resource that goes along right with what we've been discussing during these webinars. All right. So with that said, again, today is the last of the educational webinars. This is the 13th that we've done now. We've got a launch webinar on May 28th, which dives deeper into the book, the bonuses, some key things that you want to be paying attention to. So definitely make sure you stay tuned for that. But today is going to be the last topic on building new edges and doing trading studies. It's going to be a lot of fun. Again, these last few webinars are about really making the jump, I think, from stage 2 to stage 3, stage 4. And identifying things with your own system, developing new edges, developing a new setup that can help you kind of make that jump to that next level of performance. So that's really what we're focusing on today, is continuous improvement, adapting to changing markets, finding a new setup that allows you to manage risk tighter. That's what we'll be talking about today, and talking through that process. And also, just like in the previous webinar, discussing how AI can help us leverage and assist us in this. AI is not going to be able to do all the work for us, and we actually don't want it to, because a lot of the value of doing trading studies is in actually, diving deep into the charts, diving deep into the data, noticing trends yourself. But what AI can do, and I'll show some different prompts that you can use, it can help assist you in identifying things that you maybe missed, getting an outside perspective, brainstorming, bouncing ideas off of it. So there's a lot of great things that we can use AI to help with these trading studies. So I'm excited to dive in with that. So let's go ahead and keep going. Again, just one more thing, it's being released next week. If you order now, you'll get it as soon as you can. I think everybody who's pre-ordered previously should get it pretty close to the launch day. So super excited to get this into your hands. But if you haven't ordered it already, definitely go ahead and do so. We put a lot of work into this book. You guys have seen the amount of work we put into these webinars. We put in even more into the book. So I really think it's going to be an amazing resource for you guys. So make sure you pick it up. And also in the chat, yeah, I see some people already saying it's coming on Tuesday. That's awesome. Let me know when your book is supposed to be arriving. Yeah, the book is about 500 pages. And included in there is a model book. And especially if you're more advanced, I get a lot of questions. Is this book for somebody who's more beginner, more advanced? I think there's definitely something in this for everybody. But I think it's more geared, at least the foundational chapters, to someone more in stage 1, stage 2, and the beginning of stage 3. But again, that doesn't mean that there's not something in there for stage 3, stage 4 traders, especially the later chapters. What we're talking about today can help you perform even better. But I think this is a great first book and a great gift for somebody who's getting interested in trading as well. All right, let's go ahead and move on here. This is a review from Mark Minervini. We sent him an early copy, and he said the Trader's Handbook is a comprehensive encyclopedia for investors interested in learning the ins and outs about technical analysis and stock trading in general. Packed with explanations, practical insights, and real-world examples, it also features a model book section showcasing historical stock market winners, highlighting their breakout points, key patterns, and notable price behavior. A great addition to any trader's library. So this is amazing to hear from Mark. Obviously, we've all read his books, and they're fantastic. And yeah, it's great to hear his perspective and get his approval as well for the Trader's Handbook. And yeah, definitely heed Mark's advice there and pick up a copy. If you're on the fence, definitely listen to Mark and grab yourself this resource. And here it is from Stan as well, another person who's influenced many of us. The Trader's Handbook is a clear, no-nonsense resource for anyone serious about improving their trading. It's rooted in common sense, sound technical principles, and most importantly, discipline. The authors focus on price action, trends, risk management, and teach you how to build a real process, not just chase opinions. It's a practical book that respects and emphasizes the core truth that the tape tells all. I recommend that you pick up a copy for your trading library. So again, that's from Stan, the author of Secrets for Profiting in Bull and Bear Markets. Both Mark and Stan have influenced so many of us, and it's amazing to hear their thoughts on the Trader's Handbook as well. And yeah, Jay, the tape never lies, and we definitely respect that in the book and dive deeper into how we've applied that concept and what we've learned from Stan as well. All right. So those are a few reviews if you're wondering what the book has in store, and let's keep diving in. Oh, actually, one more thing, another incentive to purchase it if you haven't already. This weekend only, if you pre-order another copy, you'll receive an additional $200 TraderLion gift card valid on any masterclass in our library. And we actually have a Memorial Day sale going on right now as well. So you can kind of get an even better deal by unlocking a $200 TraderLion gift card, as well as using that on the Memorial Day sale. So this, if you pre-order another copy by this weekend. So again, you can scan here to add a copy. In addition, if you've already purchased a copy, you can unlock this offer by getting another version of it. I love having both an Audible and a hard copy version of books that I really want to study and dive deep into. So if you go ahead and order another copy, submit your receipt, and let us know that's your second copy, you'll unlock this as well. All right. And sorry, one more thing. I just want to emphasize again that this book in of itself is an amazing resource, but by purchasing the book and picking up a copy, you're unlocking a whole suite of additional trading resources, all housed in the Trader's Handbook educational course. This includes the webinars that we've done, all organized for you, bonus educational articles and guides, the companion workbook, which dives deeper into exercises that helps you apply the material in the book. Again, we don't just want you to passively absorb, this book. We want you to actively apply the concepts, and that's what the companion workbook is all about. And then in addition to the model book in the book itself, We also have a weekly charts model book, a base breakouts model book, a sell rules model book, a market cycles model book. These will all be released on one day each subsequent day next week. We've posted the schedule before. And there's also an exclusive Q&A next week for people who have pre-ordered the book. So a lot of bonuses that come with the book itself. And in addition to all of this, you also get 3 bonus exclusive webinars on trading breakouts, gappers, and pullbacks, key momentum trading setups. And I really dive deeper into my process, how to manage risk in real time, trading these names. So let us know in the chat if you've attended these, what you thought, but I think this is a great value add to the book as well. And then also you'll be part of the Traders Handbook community where you can exchange ideas with like-minded traders. So that is another huge plus as well. And all of these are things that you unlock when you order the book. All right. So with all that said, let's dive into today's webinar. Again, welcome everybody to the last webinar in the Traders Handbook educational series. Today we'll be focusing on trading studies, finding new edges, the process, the step-by-step process to do that, how you can leverage AI to help and assist with this process. And again, this is more geared towards people who are late stage 2, stage 3, stage 4, who want to continue to improve their performance and unlock that kind of next level of their trading system. And this is a fantastic process. It will teach you so much about yourself, about the market, about trading. It's a lot of fun, and I'm excited. So let's go ahead and dive right in. First, I want to start with a quote from, actually 2 quotes from William O'Neil. First, 90% of the people in the stock market, professionals and amateurs alike, simply haven't done enough homework. Doing studies is the homework that we need to do to make sure that we're always staying on top of changes in the market. Things have changed slightly over time. Things have gone faster. Stan talks about this. We do need to adapt to make sure that our edges aren't getting eroded, and we're always, looking for those optimal buy points. In the past, people just bought breakouts and they worked in the 90s. Now we have to be a little bit more subtle, finding those early entry points where we can manage risk very tightly, and where the stock isn't too obvious. And this is all about doing that work so you can reap the rewards of that work in terms of your performance. And then lastly, I mentioned this in the model book webinar yesterday, but I think it's worth repeating again. Study past winners and you'll buy future ones. And doing a study is all about studying the past and seeing if there's new edges that you can adopt or tweaks to your existing system that can improve your performance. So I think these are 2 quotes that really cement the key ideas of what we're trying to communicate here today. All right. So here's the agenda. First, we'll talk about what a trading study is, the benefits of doing one, then how to conduct a trading study, the step-by-step process, and then how we can leverage AI to assist with us. And then I'll talk through kind of some study examples, some ideas, and talk through how you might want to approach and collect data and all of that for each of those different types of studies that you could do. Just to kick things off, I do want to mention that just like with a model book, you do want to start small and not say, I'm going to do this study of 1,000 of the best performing stocks and find 20 data points for each of them and then find the ultimate recipe for the biggest winning stock. You do want to start small, start with just analyzing 20 stocks and a specific setup, specific entry tactic, so you actually complete the study, right? A trading study is no good if you start it and have all this optimism, all this momentum, and then you lose steam and never end up drawing any conclusions. So we definitely want to make sure that, especially if you haven't done a study yet, that we emphasize that you want to start small and build momentum by completing a study, and then you can always expand the scope, and we'll talk about that in today's webinar. All right. So how to do a study, and we'll be talking kind of specifically about finding and creating a new setup. But again, this study process and in the examples we'll talk about exactly this can apply to any type of study that you want to do about the markets. So first, what is a trading study? Basically, it's an organized effort to explore an element of the markets, and the goal is developing a new edge, a new setup, a new entry tactic, something that can help you basically perform better. So what you want to go through is, get an observation, have an idea for a study, create a hypothesis based on that idea, collect examples, analyze them, draw conclusions, and then if need be, test and iterate. So that's kind of the key cycle that we'll be talking about in today's webinar. So diving deeper, it starts with curiosity and observation. What worked in the past? What do you see all the time on charts, but aren't able to take advantage of because you don't have a process, a setup, an entry tactic to actually execute on an observation that you make. And basically what we're looking for is visual evidence of a fundamental, technical, or any pattern that could aid our performance in the market. And what's awesome about doing a trading study is that it builds conviction, confidence, and performance. If you've done a deep dive into a VCP setup, a range breakout, an earnings gapper, you're going to have so much more confidence and conviction in that setup because you know the results, you know what can happen with those type of setups. You've studied the entry tactic that you need to use to manage risk correctly. So this conviction can only come from studying 1,000 examples, hundreds of examples, and it will allow you to execute more confidently. And confidence is everything in trading. So this is a huge benefit of doing a study. People talk about doing the work, studying a setup, but how many people actually do that? And of those people, that's what sets them apart from every other trader out there, is they actually do the work, study the setup, and put in the work and build that confidence in whatever they're studying. All right, so finding inspiration. These are some fantastic traders: William O'Neil, Stan Weinstein, Mark Minervini, Oliver Kell. Each of them came up with some key fundamental principles that they now share with everybody out there. The Canslem characteristics, base types, the fall through day concept, the stage analysis framework, the VCP setup, cycle price action. How did they develop these systems? Well, they were, first of all, were curious. They wanted to perform better. They wanted to figure out the markets, how to trade, and they made observations. O'Neil would notice that the top performing stocks always had tremendous earnings growth or had tremendous institutional ownership and growth. He noticed cup and handles everywhere, and the biggest winners, the fall through day concept, would start new uptrends. Stan Weinstein, basically he created stage analysis because there was a bear market, I think in the early 60s, where he was trading based on a fundamental nature and lost, I think, half his money or the majority of his capital at the time. And he dove deep into the charts and recognized that there must be a better way to do this. And he started, identifying the longer term trends that became the stage analysis framework. Same with Mark, same with Oliver Kell. They noticed the cycles and the common blueprint of promising base patterns, and basically did a study, analyzed a lot of examples, collected and built a library of model books, and came up and fleshed out their systems, their way for interpreting the market. And basically becomes these concepts that now is shared with everybody else. And you can create for yourself a similar thing, a new setup, a new way of interpreting price action, your own terminology. But how do you do that? You do it through trading studies. All right, so finding inspiration. First step, obviously, is to become committed to improving, actually want to improve at trading and be willing to put in the work to get there. Then you want to be curious about the markets, how can you improve, notice these different characteristics and, think about, there must be a way to take advantage of this characteristic that I'm seeing all over the charts. And then also, studying established practices and what people do now, but not being afraid to question them and question common wisdom. Because sometimes, people say, don't buy below the 200-day, but there's a lot of great trends, at least short term for swing traders, that happen under those moving averages. Maybe there's not longer term trends that position traders might take advantage of, but for swing traders or day traders, under the 200-day moving average might be even more opportunity because most people don't want to trade below that. So basically you want to notice unique occurrences, especially expectation breakers, be willing to try new things and balance between your existing process and tweaks. In the AI world, there's a concept about how we learn. You've got a system, and then you randomly try new things and see how it impacts the results of the system. And if over time, certain tweaks add, alpha, add performance to the system, that's something that you want to add to your actual system so you can improve it over time. Just like with trading, you've got an established system, maybe it's CanSlim, that's your foundation, but maybe you want to try trading earnings gappers or trading an early buy point and see if it works and study it and see if it helps your process. So again, there's a balance between what you have right now, but you're not going to improve unless you try new things and see if they work, and maybe they don't work, but then you've at least tried it and seen if it actually is successful. All right, So that's finding inspiration. And the biggest thing is just to be curious. And, if you look through charts, during your routines, you're going to notice things, that maybe nobody else does that could, lead to an amazing setup or entry tactic. And I'll talk about a few ideas that I have later on in this webinar. All right. So again, here are the key steps of a trading study. First, be curious, and that's kind of a state of mind. Make an observation based on all the charts that you look through, all the trades that you've done, all of that. Define the scope of the study. This is extremely important to make sure you approach it the right way. Then after you define the scope and define what you're actually going to collect, you go ahead and collect examples. Step 5 is then to actually analyze the data that you've collected, find trends, commonalities, outliers. That's key as well. And then step 6 is to actually draw conclusions based on all that analysis, define the setup that you're maybe developing. And then step 7 is to test in reality and test small at first and see if it actually works. Test in different market conditions, all of that as well. And then 8, based on that reality and your conclusions, iterate and maybe even do more studies to further develop the setup that you're creating. So this is, again, the kind of 8 key steps of doing a trading study. And we'll now dive into kind of each of them. So, this is more of a state of mind, being curious. And I think as traders, I think we're naturally geared towards this already. So, just always want to be learning, approaching trading as a student. This is all important. Think about, when you see something happens and a stock explodes without you and goes on this amazing 80% move in 3 weeks. Think about, have I seen that before? Is there a pattern that I see that, I saw in the previous example? And a lot of this comes from what we talked about, yesterday in the previous webinar, studying winners, building a model book. You'll start to see so many different commonalities between, the common momentum movers, the common true market leaders, and how they start, continue and end their amazing moves. So just by studying winners, you'll come up with plenty of ideas for trading studies. And then again, there's this balance between the established system that you've got and exploration. For instance, one of the studies that I'm going to talk about potentially doing later on in this video is, say you've got these sell rules, that's your current system. It's more of a swing trader focused. You're selling into strength. You're selling as it breaks the 10 EMA. How would your results from your actual entries improve if instead of selling at the 10 EMA, you sold at the 21 EMA? And that's a study that you could do, and that's kind of exploring new things, but you don't want to just throw out your existing system and start anew each time. You want to slowly build, tweak things, test things, see if they work, see if they don't work. And if they do work, then you can add it to your process and continuously just improve your system. So there's always this balance between what you're currently doing, your current rules, your current setups, and trying new things small to see if they actually have a positive impact. All right, this is super important, and I'm going to take a water break right here. And as we go, guys, by the way, please drop any questions you have in the Q&A. I'll probably address most of them at the end, but definitely put down your questions in the Q&A section if you haven't already. All right, so defining the scope of the study. This is extremely important and probably something that you should spend a lot more time on than you think you need to. Probably most people think the bulk of doing a study is actually collecting the examples, doing the analysis, but if you don't do this step properly, all that work that you might do is going to be kind of a waste because you're not going to properly be focused and specific enough to actually get meaningful results out of a study. So what you want to do is be very specific in terms of what you're looking to accomplish. Avoid study creep. And what this means is expanding the goals and the scope mid-study, calling it audible and saying, I went out and I was just going to study IPOs, but now I'm studying stocks that are 5 years old as well. And, just the scope of the study gets bigger and bigger and bigger and bigger. And then you never finish it. You never actually analyze the results, or there's too much stuff to actually analyze. So what you want to do is be very specific and be very rigid in terms of what you're actually studying, especially again, if this is your first trading study that you've ever done. Then, after you've defined kind of the scope and what you'll actually be studying, create a hypothesis. And you'll want to use this kind of format here. I will collect many examples of insert observation here. My hypothesis is that blank. So I will collect many examples of earnings gaps. My hypothesis is that earnings gaps that perform best in the first 5 days perform best over the next 3 months, something like that. So you kind of want to put it in that same format, whatever you're deciding to study. But I really want to emphasize here, defining the scope is so important, and you want to be very specific. It's like writing trading rules. And again, if it's your first study, start small, study 10 examples, don't study hundreds, and just, have success with doing your first study, and then you can move on to bigger and better things. All right. So here's an example, and I kind of just said this. I will collect 250 examples of earnings gap ups from 2010 to 2025. My hypothesis is that stocks with very strong earnings gap ups outperform in the months after the gap. So again, this would be a basic earnings gap up study that you can learn an immense amount from and really build conviction in that setup, but only by collecting those examples and studying them, looking at their price trends, looking at the entry tactics you could have used, and collecting data about these earning gap ups. So this would be an example of applying how to define the scope of the study. All right, so once you've just defined the scope, then you want to actually go ahead and collect examples and the data itself. And there's a few different ways that you can do this, kind of 3 main ones, and maybe 3.5 ones now with AI. But first is, doing it manually, studying top performing stocks, building a database going back 10 plus years of great IPOs, great performing stocks. And in reality, this might actually be the best way because you're going to really learn each of these examples and dive deep into them. But if, this is the most tedious and most, work intensive way. So another way to do that is work with a team. If you've got a trading buddy or, a few trading friends, you can crowdsource the work together to build that database. Maybe somebody's in charge of IPOs, somebody's in charge of new stage 2 uptrends. You split up the work that way. And then it all comes together and each of you would kind of be an expert on your part of the study. And then you can combine that knowledge into your actual conclusions. And that's actually a really good way. And it also is a way to really encourage you to complete a study because you're not just accountable to yourself, you're accountable to your team and the work that they're doing. If you want to benefit from them, you better perform as well. So this is actually a really good way as well. And it's a great way to build friendships as well, to do a study together. So this is a really good recommended way to do a study. The Life Cycle IPO trade team who wrote that book, they worked together to do that study and write that book, which presented their conclusions. So that's a great example of this method. The last way is doing it automated. So use Python or another programming language to collect examples of your observation pattern. You could also use a platform for screening like DeepView to look in the past for different characteristics. And this is another really good way to collect a lot of examples, but you're not going to be able to quite go as deep into each of them as you would if you're doing it manually or crowdsourcing. But one way that you could do it is, maybe you automate collecting 1,000 examples, you write a Python script to look for gap ups, but then you dive deep into each of them or into a subset of them. That's kind of a best of both worlds to collect a lot of examples to get more relevant data, but it's not quite as time intensive as collecting 1,000 examples manually. So you can kind of blend these different ways as well. And then, if you're not a great coder or anything, there's amazing things you can do now with AI. That's one way to leverage AI with this process is, use it to write a script to collect the data for you. And the biggest thing with that is this step right here, defining the scope of the study. You want to be very specific with this because the more specific the prompt that you give the AI, the better the program it's going to be able to write and the less amount of errors there'll be in that script. So that could be a really good way to leverage Python using AI to collect as many data points as possible. All right. Data collect. This is a really key topic. Based on the study you're doing, this is going to be a little bit different, but you want to kind of define the key characteristics relevant to that setup. So again, we've used the example of an earnings gap up. What characteristics define an earnings gap up? Maybe it's volume on the gap. Maybe it's short interest. Maybe it's percent change that first day from the open to the close, the range from the high to the close of that day, where we are in the market cycle. Are we above or below the 21 EMA? You want to think about the things you pick up on using your eye when you're looking at that study and the things that you're looking for, just naturally to show, is this a strong setup or price and volume move or not? And that's kind of the characteristics that you want to collect. And basically decide what data to collect with each example and decide this ahead of time. Again, you don't want to just call an audible and say, at the beginning, I was going to collect this data points, but now I'm going to collect, these 20 more data points. And the reason that doesn't work is because, again, that kind of discourages you from completing the study, because if you've already collected 100 examples and now you have to go back to each of those and collect, 3 more data points for each one, that's tedious. It takes a lot of time. So definitely try to define a final list of characteristics before you actually go ahead and start your data collection process. And I mentioned here again, market environment, because we don't want to underestimate the impact the market environment has on whatever characteristic, setup, entry tactic we're using, because the market impacts all. And I think that's overlooked in a lot of studies, is that the market environment is going to drastically impact the performance, as well as just whether or not a setup's going to work or not. Breakouts don't work in bear markets. So if you're collecting examples during a bear market and you don't take that into account, you're going to think that setup just doesn't work, period. But it's really about what the market environment was when that setup occurred. And then again, data points, you want to collect any technical and fundamental data points relevant to the setup. So going back to the earnings gap, where I mentioned a bunch of technical setups or technical characteristics, but fundamentally, earnings growth on that report that caused the gap, the EPS surprise on that gap, anything that you can go back and study. And in Deep View, it's awesome that you can go back, hover over the earnings report, and actually see the EPS surprise. That's a great way to collect that data as you go through. And yeah, a source of past fundamental data, I think Google's a great way. You can actually look into the reports itself, or Deep View has a lot of it, and we'll be adding even more historical stuff, so you can really dive deeper into each of those different metrics. All right, so again, here's the gap up application. I mentioned, collecting the market type. Are we above or below the 21 EMA? That would be a column in the spreadsheet that you're filling out. On a technical level, the gap percentage, the gap number. So is this the first, second, or third gap within the trend? Percentage from low to high on that day. The ATR move that gap is, this move based on ATR. The closing range on that day, so where we close within this bar here. The volume compared to the 50 SMA. Are we above or below the KMAs? Those would all be technical factors that you'd want to have as columns in the spreadsheet you're filling out. So Palantir gap, collect all these different information in that spreadsheet. Then on a fundamental level, again, the earnings sales growth the last quarter of that gap, the EPS sales surprise, again, you can hover over a quarter in Deep View and see those numbers right there for you. So that's an easy way to collect that information. But again, whatever technical or fundamental data you're collecting is stuff you're going to want to be looking for in real time as you apply this setup. So that's the data to collect for a gap up application. All right, so you've got your data. Now what? Well, now you've got to analyze it, right? So first, you want to set kind of performance criteria. So all this stuff is kind of your independent variables, really. These are the characteristics that define the setup. This next part here is what you're measuring the success of the setup as. So these are definition criteria, and these are performance criteria. So performance 1 month from the gap, 1 week from the gap. Those would be columns that you'd want to fill up as well on your spreadsheet. Percentage drawdown from the gap up low in 2 weeks from now. All these factors could be data points that you calculate based on each individual gap that kind of measure the success of whether that gap up setup was successful or not. And you could also include performance 3 months from the gap, 6 months from the gap, 12 months from the gap. This is pretty easy to do and automate in Python. Once you have the day of the gap, the stock itself, you could easily calculate percent change from the close of that day to the close plus 50 days. So again, I definitely would suggest leveraging Python and AI to help with that if you're not a great coder, to calculate these performance criteria and easily add it to your spreadsheet. Then in addition to calculating performance criteria and doing that thing, you also want to see if you can group any commonalities between the examples that you're collecting. So there's earnings gaps that immediately just make a move, in 3 days. They fall through immediately and just go. There's ones that move up, pull back, and U-turn. And then there's ones that gap up and immediately fail. So those would be different types of groups that you could, define. Specifically, you want to be very logical and specific with the language you're using to define these. But then that could be a data point to add to your spreadsheet. And then what's awesome about that is that you could create a graph or a chart using these groups and plotting the performance criteria versus these groups. And you can see, hey, immediate movers always do better 6 months from now, or U-turns offer the best risk reward compared to immediate movers, or failures always fail and have a large drawdown in 2 weeks right away. So this is a really important step that will be key to actually using the data that you collect from this trading study to apply it to your trading. And Sai says in the chat, no matter how much past data we collect, no guarantee the price action as the market is dynamic. 100%. A gap up, even if you study a gap up and find the perfect entry tactic, it's not going to work every time like it did in the study, or the general conclusions from the study. And that's why we have stops, right? But what we're trying to do is to find an edge, a higher probability of a strong reward to risk ratio over time. And that's what we're trying to find with these studies. All right, so again, here's applying it to the gap up application. The performance criteria could be performance 1 month from the gap, 1 week from the gap, percent leak below the gap up low of this day right here. And then grouping could be immediate movers, U-turns, and failures. So again, this would be applying what we just talked about to specifically the gap up application and drawing these conclusions right here. All right, so how do we dive deeper into what the data we collected actually tells us? So what you want to do is analyze the data both as a whole and in groups, plot the definition criteria versus performance criteria. So creating different plots, based on the percentage gap, and then plot the stocks versus the performance 1 month from the gap, and then look for trends and look for outliers. And this is really key. So again, you want to look for overall trends, such as if the gap is bigger, the general performance over the next 6 months is bigger, but also if there's a bunch of outlier stocks based on a single definition criteria, those can give you really great clues in terms of what characteristics to actually look for into the future. So if there's some key outliers based on a definition criteria or performance criteria, identify those and maybe dive deeper into that specific example manually. And that could give you some really great insights that you can apply to your trading and might provide the best insights you have throughout the entire study. So again, analyze the outlier stocks based on performance and definition criteria, what's special or stands out about them, and then take all this information, summarize your findings and ideas for future studies. So again, summarize your findings and then think about, what else could I study based on what I, concluded in this study. What's something else that I could do to expand on what I already found, or that might give me additional insight? And those would all be ideas for future studies that you could do. But again, it's not about expanding the scope right away. You always want to complete the study and then potentially start a new one. And this might be a question that people are thinking, how often should I do a study? I think, one larger one a year is awesome. You can do kind of smaller ones, maybe a few times a year. The summer is often a really good time to be doing a study because the market is often chopping around. During corrections is a great time to both be doing post-analysis as well as doing a study. But I think just do it consistently each weekend. Again, you don't have to complete it all in one go. Just do it over time and be consistent with it. And then you can go ahead and do it. All right. So again, drawing conclusions, the ideal setup. So think about, based on all the data you collected, what definition criteria had the biggest impact and increased likelihood of impacting their performance. So there might be some definition criteria that, whatever they were, had no real statistical relevance to the performance of the stock. But there's probably going to be 2 or maybe 3 that really, move the needle. So think about what would the ideal setup be based on your findings, and that's your blueprint going forward. And then you can create screens and processes to look for the blueprint going forward and collect examples in real time. All right, so drawing conclusions. Again, this is a key reminder to remember the market impact. The market environment likely is one of the most important definition criteria, even if it's not specific to that stock. It's going to be impacting everything. So think about, what did the market look like in the most successful examples? And in these periods, were there groups or similar stocks all working? So this is something really important to look at to see, do earnings gap ups work every time, or just when the market is above the 21 EMA, or maybe when the market is just about to break above the 21 EMA. All those things are something to consider as you're drawing conclusions here. All right, then, once you've completed a study and got that blueprint, what you want to do is actually test it in real life, but you want to test small and do this over time. So test the blueprint to find current examples. Use consistent entry criteria, start small, adjust the setup entry tactic based on real life feedback. And remember that the market is going to have a big impact. So if the conclusions of your study were mostly that the setup has great success in a new daily uptrend, don't be surprised if something you try when we're in a correction doesn't have the same impact as the study examples. So remember the market. All right, and then again, iterate. Think in cycles. Take notes on applying the setup entry tactic in real life. Think about what improvements you can make to the setup, what definition criteria seem most important in reality, and again, think about what further studies you could do to dive deeper into that particular setup or in a similar setup as well. I'm going to talk about, we talked about primarily gap ups today. I'm going to talk about a sample study that you could do on gap downs, the ones that then rally immediately and actually start longer term uptrends. So you can always think about similar studies you could do and apply the same process to learn even more about trading and the markets. All right, so getting into leveraging AI, a lot of what I talked about, again, emphasize that manual in a way is where you're gonna get the most benefit out of doing this. But just like with building model books and doing post-analysis, I think there's so much potential in leveraging AI to dive deeper into this process and help us brainstorm, help us think through and analyze the results and all of that. So here are a few prompts that you could use to dive deeper into it using AI. So here's one. I'm doing a study on stocks that gap down on earnings. Based on the data table I've uploaded, identify any key trends or common factors between the stocks that had the strongest 1 month performance after the gap. So that could be something to put into ChatGPT after you've created that data table already, collected the data, and maybe looked at the trends yourself and tried to see, based on your intuition, what key trends are there. But this would be a way to figure out anything you missed, and this could be a really powerful prompt for you. Then what would be some other interesting characteristics to look into and include in the table that may help me identify strong winning stocks? So again, this is a way to help it find any definition criteria that you might have missed or hadn't thought of. That would be great to add to your study. Then what would be some follow-up studies to do based on my observations and data I collected? That would be after you upload the report to it and see if there's any follow-ups that it would suggest. Then you could also ask it to create a plot of definition criteria versus performance criteria for you. Analyze any trends you see to see if it confirms your analysis yourself or just comes up with new thoughts. And then based on all that I've shared so far, is there anything else I should consider that I may right now not be overlooking? And this is one of the most powerful ways I've used AI is I'll kind of present my initial draft of an idea or a concept, and then I'll say, critique that, take the other side. And is there anything I'm forgetting or anything I should take into account that I'm not already? So this is a really powerful prompt, not just for stock trading, but your life in general, that you can apply to many different situations. Use AI to challenge your beliefs and challenge your views on what is best or what's the best way right now. And it'll give you suggestions on other things to consider. And, it might give you a whole new perspective on, what you're overlooking. So I think this is a really great prompt, both for doing trading studies as well as just in general. And then this is a warning that I want to include, right now, AI is amazing, but it's still developing. It's still, it's amazing how far we've come in just a year, it seems, now with AI. But still, I have found that, AI doesn't do the best at math calculations. And it's kind of surprising to me that they can't just use another engine whenever they sense that there's a math aspect to it and then just do regular coding. But I would just say avoid using AI to do math calculations. So don't use it to calculate percent change or anything like that. Do that stuff manually or just with Google Sheet formulas or Excel formulas. And then give it to AI to analyze the results. But don't natively use AI to do math calculations because sometimes it just makes up numbers. And double check anything that it does come up with. That's just something to remind you guys. Maybe it will improve in the future. 100% it will improve in the future. But right now, just make sure that you're not overlooking something because AI came up with some crazy numbers that then skew your whole analysis. So just a key reminder there. All right. So now I want to end today with just a few examples that you could think about as you're maybe coming up with your own ideas for studies. So first, the observation. and promising names promising names sometimes gap down on earnings and then immediately get bought up and start significant rally. So there's a lot of recent examples to this. Palantir, went to new highs, then had earnings gap down, and then rally back to new highs. And there's some that are even more powerful than this. Often when a stock is in a late stage one and close to developing a stage two, it might have one last gap down on earnings that immediately gets bought up and then it starts a stage two uptrend. So that's the observation I've made based on studying a lot of model book stocks. And my study idea is there a clear characteristic that I could use to identify the strongest performers? And is there a repeatable entry tactic that I could use to enter these gap downs? So that would be kind of a study idea based on that observation I made. Another study idea, many stocks make powerful moves shortly after their IPO. This is a study that many people have done, but it continues to be a powerful edge because a lot of people are, scared of buying IPOs. So is there a set of characteristics that identify the strongest performers and a repeatable setup and entry tactic I can use to enter? Just, recently with CRWV, that shows the potential of, gap up moves off the bottom of IPO bases. So you'd want to kind of study a lot of examples going back in history, collecting 100, IPO base examples, and you'll learn so much about that setup, when to apply it, and gain that intuition about when something like CRWV could occur. So that would be something to look into. Then another study idea, and this is a little bit different. I'll tell you why. Observation: my current sell rules often get me out of stocks, and that then continue to trend without me. So this is from the perspective of a swing trader, maybe that likes to sell into strength and sell at the 10 EMA. And then the potential hypothesis is, how would my performance change if I only sold when a stock closed twice below the 21 EMA? So this is a little bit different than everything we talked about because it's a study you could do on your actual stock trading results. So you would basically use your entry points and then see and calculate your performance based on, instead of using your existing sell rules, how would your performance change both in drawdown, volatility, and then raw performance if instead of your existing sell rules, you only used this sell rule? And this could open your eyes in terms of the performance you could have and how asymmetry can help you in the market. So this is actually a great study idea to start with, is look at your own entry points and then calculate, don't use your current sell rules, but if you only use this sell rule, how would that change your performance? And if it improved it, are there any tweaks you want to make to your system, based on this study? So this could be a really powerful idea that, again, could propel you from stage 2 to stage 3, just like that. So this would be a really cool thing to do, using a study of your own data. So this is different than going out and collect setup examples. This is doing a study on your own data. Another example that you could do on your own data is, my tickable stop is, say, below the low the previous day. How would my performance change if my initial stop was below the day's low of when I enter? And this would be interesting to study because, some trades might actually perform worse because maybe you bought and then they shook out and then went higher, and you'd have to note that in your study results. But would net it help you out by having a tighter risk management? Maybe you could position size a little bit higher with a tighter stop, all of that. So this would be a really interesting study, again, to do on your own results, your own trading performance, and seeing if it would help you out. So this would be kind of a risk management example of a study. And then this would be a sell rules position management idea for a study. So both of those are key things to try. So that's pretty much it. And kind of my key points that I want to make here today is, first, studies are awesome. They're a lot of fun if done correctly, but definitely start small and don't be too ambitious because you want to actually complete a study to get the benefits from it. And I think to start with, looking at your risk management, looking at your sell rules, and then maybe just starting with studying your favorite setup or a setup that you want to learn more about. So gap up setup, a breakout setup, doing that first is probably the best study that you can do. And again, it will help you build your confidence, build your conviction in that setup, all of that. And that can really help your performance. So hopefully, guys, you enjoyed today's presentation, and I'll kind of see if there's any key questions that we should take a look at. All right. Let's see here. Let me open up the Q&A. And if you have any questions right now, drop it in the Q&A if you haven't already. Let's see. Paul says, maybe I listed a lot of prior webinars. I'm a newbie. Can you please kindly elaborate a little bit on how to study what kind of investor trader I am so I can develop investment studies tailored to my own personality? Are there personality tests I can take? Many thanks. Yeah, so I would definitely suggest watching our first two webinars where we talked about identifying what stage of a trader you are and how to tailor your system to your style. So throughout the webinars, we kind of talk about this. If you're a swing trader, this set of rules would be better than this. So definitely go ahead and check those out. And I'll send out today a link to all the previous webinars, one link that you can access them, and they'll be in the trading educational course that goes along with the Trader's Handbook as well, all there for you. Where do you get past data? I have various sources through DeepView, but there's a lot of sources out there. You could just do it manually through your charting service as well. Let's see. Can you use DeepView screen for historical data? Very soon you'll be able to say, hey, find me earnings gaps within this date range. Right now you can't just yet, but that's coming very soon. All right. Carlos says, a very good friend bought the book and sent it to me as a gift. Then I went to buy the book and sent it to my brother. Will I still get the bonuses offered for this webinar? Yeah, if you submit your receipt through the link, which we've sent out by email a couple times, you'll get the bonuses. No problem. All right, cool. Let's see if there's any questions related to doing studies. Past earnings numbers. I use DeepView. We use S&P Global. That is very reputable. It's kind of institutional quality. So that's what I use. But just Google often has really good numbers if you want to do it more manually. Gier asks, is there a way to get your trade data from a broker into an AI app? Often you can download it. It probably takes some processing. And that's something we want to bring to DeepView so you can just natively upload it and it'll do analysis for you, or you could tell it to do a study on your data. This is kind of my vision for our journal with DeepView is you link your broker and then, you could basically do this type of study just with a prompt, say, hey, adjust all my stop losses. So it would be at the low of the week instead of the low of the day. And it would just calculate what your change in performance would be. And you give it a set period to study. So that's kind of my vision for DeepView. That'd be super fun. Also with sell rules, say, hey, DeepView, change my sell rules to below the 21 EMA, and it would output kind of your change in statistics, your batting average, all that stuff. So that'd be really cool. Pawan asks, when is the book getting released on Amazon? It's available right now to purchase. I'll go ahead over to the QR code right there. You can scan it to get it. You can also do on Amazon, the Trader's Handbook, you'll find it. And it's being released on the 27th. A lot of people have already pre-ordered it. We'll get it on that day, which will be super cool. But it's available now to order. All right. All right, let's see if there's any questions. Theme tracker, James, is in the DeepView dashboard. And then if you click the plus sign, you're able to drag in different widgets and apps. And it's right, if you scroll down, it's right at the bottom, I believe. No problem. All right. So with that, I think I don't see any other questions coming through. So just want to say a sincere thank you. Thank you guys to everybody who's attended these webinars. We really hope that they've helped you in your trading journey. And in addition to that, we hope the book really helps you out. I think we've created a resource that is really special and can help a lot of traders out there. I think it's a great gift for a trader friend that's just starting out, or even, again, if you're more experienced, there's going to be plenty in there for you, especially the last few chapters about, keeping learning, keep improving, all of that, studying model books. So definitely pick up your copy if you haven't already. And thank again, you guys, for attending these webinars. They've been a lot of fun, but they've been made more special because of you guys and your questions that you ask and your participation. So appreciate all the kind words, the feedback. It's been really awesome to get to do this. And again, a little bit sad that's ending, but it's been a lot of work, but it's been worth it. So thank you guys all. Let's see. Yeah, thank you for the thank yous in the chat. Awesome. Very nice. Yeah, awesome. And yeah, when you guys get your copy, those of you who have ordered, especially on Tuesday, definitely tweet at me and TraderLion when you get your copy. Show it off. I'll send you a thank you personally. And yeah, it'll just be great to see you guys sharing your copies. That'd be super awesome. If you've got a landmark in your town or nearby, take a pic in front of a key statue or something to show us where you are. It'll be a great kind of community building moment. So thank you guys all, and look forward to your thoughts on the book, sincerely. And again, on the 28th, we'll be doing a launch webinar talking more about the bonuses, how to get them. If you've pre-ordered and submitted your receipt, you're going to get the bonuses. And we've talked about the schedule and when you get each model book, but I'll send more information out via email as we get closer to the launch day. So thank you guys all for tuning in. Thank you all for the thank yous in the chat. Really appreciate it. William says, if you haven't already signed up for Richard's Trade Lab report, thank you, William. I work very hard on that as well to get good education, but also good real-time ideas and thoughts and setups. All right, perfect, guys. Thank you guys all for tuning in again, and I'll see you guys in the next one. Cheers.